Lessons learned from inspiring investor Ray Dalio. Ray Dalio is widely regarded as one of the most successful and recognized investors on a global scale. He's the creator of Bridgewater Associates. His investing firm, Bridgewater Associates, manages more than $160 billion worth of assets, making it the largest hedge fund in the entire world. But it's not simply Dalio's financial prowess that makes him stand out. It's also his novel approach to investing and the universal rules he follows to be successful in any endeavor. So in today's video, we will see some lessons learned from this inspiring investor. So stay tuned till the end. Clear set of principles and its importance. Dalio highlights the significance of having a set of guiding principles that are derived from one's own personal experience and that have been validated over the course of time. This not only helps to establish a framework for decision-making, but it also provides you the conviction to act on the decisions you make. In his book titled Beliefs, Dalio details his personal experience, including both achievements and disappointments, as well as the lessons he gained from them.
Capitalism has got to work for all the people, and democracy's got to work for everybody.
These experiences serve as a basis for Dalio's principles. You may avoid falling into the trap of continuously second-guessing yourself and make judgments with more assurance if you have a well-defined set of principles to guide your actions. Diversification. Dalio's method of diversification is distinctive in that he does not only spread his assets out across a variety of asset classes, rather he spreads them out across a variety of investment kinds as well, including stocks, bonds, and commodities. This strategy serves to reduce risk while simultaneously increasing returns.
Lessons are the ability to have thoughtful disagreement,
by diversifying assets among a variety of categories, industries, and geographical locations. Avoid the herd mentality. Avoiding the herd mentality of going along with what everyone else is doing is something that Dalio stresses as being very important. He advises investors to think for themselves, conduct their own research, and not let themselves be persuaded by what the general consensus is. Investors are able to make decisions that are more informed and can avoid making the mistakes that others have made if they avoid the mentality of the herd. Admit when you are wrong. Dalio is of the opinion that one of the most important factors in determining one's level of success is one's capacity to recognize when one is in the wrong and to grow from one's experience. At Bridgewater Associates, he encourages his staff members to have what he calls radical openness and to freely share their thoughts, even if those opinions are contrary to his own. This strategy contributes to the development of a culture that values ongoing education and advancement. You may improve your decision-making skills, fix your errors, and learn from them if you are willing to acknowledge when you are in the wrong. If you're enjoying this video, please hit the like button and subscribe to our channel if you haven't yet to show your support. Now let's continue. Continuous learning and self-improvement. Next lesson is that continuous learning and self-improvement should be in you. Dalio is of the opinion that lifelong education and the pursuit of personal growth are important to achieve one's goals.
So what do you mean by a depression? Okay. Something like...
At Bridgewater Associates, he urges his colleagues to continuously test their own beliefs and to be open to modify their minds when new data is presented. Investors can stay ahead of the curve and make better selections if they continue to educate and improve themselves throughout their careers. Be open-minded. Additionally, Dalio stresses the significance of having an open mind and being willing to take into consideration the viewpoints of others. At Bridgewater Associates, he encourages his staff members to have what he calls radical openness.
So I can reduce my risk without reducing my return.
And to freely share their thoughts, even if those opinions are contrary to his own. This strategy contributes to the development of a culture that values ongoing education and advancement. Investors can benefit from considering a variety of viewpoints and making decisions that are best informed if they maintain an open mind. Should have a long-term perspective. The last one is that you should have a long-term perspective. Dalio is of the opinion that the world of investments is fraught with unpredictability and that the future cannot be forecast.
So you can see radical differences in the financial consequences of that.
He encourages investors to adopt a long-term perspective and embrace uncertainty in their investments. When investors have a long-term perspective, they are able to concentrate on the fundamentals of a firm rather than being misled by the short-term volatility in the market. Well, that's all for today's video. Tell us in the comment section how this one was. I hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more. And don't forget to give comments and provide us with your valuable feedback. We'll see you in the next video with some more interesting facts and stories. And until then, stay tuned.